Welcome everyone to the Kindle Report. It is Wednesday night and it's coming into the final day of the quarter. I'm going to talk a little bit about some long-term expectations here and see where this show leads us. It could get interesting. Remember, before I get into this, to subscribe, like, and share these videos and hit that notification bell so you know when I come live. So there's interesting day that we went through on Wednesday. It was very choppy, very narrow range, very volatile. It was almost directionless. They were bouncing between 38.01 and 40 and just randomly. And we're still seeing some of that same activity. And there was some big seller showing up at 38.20 all day long. And they were fearless and you couldn't squeeze them at the end of the day. They tried, but there was nothing there. So it was interesting. So one of the things I talked about last night was that we'd probably see GDP come in a little worse than what was expected. That happened. We came in minus 1.6, and that was 0.1 worse than the previous of 1.15. And while that's not a big deal, it does show that as they go through these numbers, they're seeing more and more weakness. The numbers that are driving this thing is getting weaker and weaker. And I still think as we come into Q3, which will start after the holiday this weekend, I think what we'll see here is some moderation of this downward pressure that we've seen over the last several days. And we'll start to set up, I think, at least a 4 to 6 week potential rally. It's sitting right on the edge right now. There's still a lot of support. I'll go through all the stuff in the technicals here in a few minutes. But we're just finishing everything at the bottom of this quarter, right? So we're here within 100 points of the lows. Everything looks about as bad as it can be. And one of my definitions I've always talked about, the definition of a low is the worst than it could look on any given day. So when it looks so bad, it's ridiculous. That's probably the low. The opposite is when the market's making a top, is it looks so good, it just feels like it's going to go up forever. And that's right where the turning point is. So we're not maybe quite at that capitulation point. We did see that when we traded into the 36 handle a couple of weeks ago. But there's an interesting pattern I'm going to show you, and I will do my best to describe something. I went through this in the live room today, and there is a pattern setting up that I think will ultimately emerge from this pattern that we're in right now. So just looking at my notes here, let's talk about Powell real quick before I get into some other details. He added nothing of any interest whatsoever. I thought there might be some kind of secret plan to juice the market a little bit today, but there really wasn't. There was no reaction to virtually anything he said, and he didn't really say anything of interest, like I said. But I think what the markets are looking for is, some other guidance. I don't even know what they're looking for. I'm not sure. When you see a day like we saw on Wednesday and just a choppy session, it really doesn't give you any insight into anything. And I'll go through the database here in a minute. Database is pausing right at this 42% level, but we're not getting any more traction. Nothing's really happening at all here. So we as we look back also on yesterday, there were 611 sectors ended up positive. Energy now, we've been bouncing. It was down 3.4%. And I still think the energy complex, while there may be some more upside, I still think things like the XLE, they're consolidating here. There's not going to be any new trends develop. At the moment, there's going to be quite a bit of action that's going to have to happen before we're going to see any real traction and the energy stocks come back in play. They may not come back into play for a while. That complete disaster that happened when especially on the XLE, when those energy stocks just retraced so hard, that was pretty significant. Those are typically a intermediate top when those things happen. So I'll keep my eye on that as we go forward. Just checking my notes here, and yeah. So let's talk about this for a minute, and then when I go through the technicals, I'll unpack this a little bit further. But really, at the end of this quarter, we're actually going to close most likely. It's not important if we don't, but the 10 period moving average on the quarterly chart is 38.49. So we're just slightly below that. I don't really care if we close above or below it. I'll show you here in a few minutes. The PPMs on here are in trend mode down. There's nothing that's going to change that, but I still have expectations for a Q3 rally. Now, I'm not looking for it to rally for 3 months. That's not what I'm saying here. I'm just looking for it to close higher than where it is right now. So I suspect you'll see, I'll talk about this pattern. I still have not found a valid tool that will work on this new computer I have to be able to draw on these patterns like I used to. So I'll talk to you about this one. And in fact, I have an image. I'll put it on Twitter. So follow me on Twitter, and I'll put this image out here shortly after the broadcast tonight. So it's Twitter. I'm at Portfolio Expert, and there's no E in the expert. So Portfolio Expert, no E. So follow me there, and I'll put this chart. It's actually just a diagram that I drew. I will put that image out on Twitter when I get done here tonight. So but the overall scenario that's happening here, this close, I've been talking about this for a while. I'll just set it up, and then we'll go into technicals here in a few minutes. But what I've been talking about, if it started back in January with the outside reversal, we got a Q1 was negative, Q2 is negative, and in fact, I saw somewhere, and I have to flash back, I'll look at some of these stats, but this has been the worst start of a year since like 1970, and I'm not sure what was going on in 1970. I was graduating from high school, so I don't remember. I'm going to go back. I didn't have a chance to look at the movement there, but we actually have one of our institutional strategies that we have out there went in cash on December 17th and is still 100% in cash. It's never owned anything all year long. It's an ETF strategy, but it's just been protecting the capital all year. I guess you could take, minus the inflation rate on the dollars you have there. I guess you could depreciate it a little bit, but it's a lot better than being long the Nasdaq and those type of things. That the S&P is down 19.9 on the year as we come into the end of the quarter. The Nasdaq is down 28.6 and Russell 23.4. So not a pretty quarter, not a pretty year so far. It's really, I don't see anything going on. I had a conversation I mentioned in Twitter Spaces yesterday morning, and one of the things and I mentioned this last night, this will probably be a little bit of a theme, but some of this inflation that we're seeing out there, we saw not only the GDP come in a little worse than the previous reported, but also the deflator was an uptick as well. It was at 8.2. It was expected to be 8.1. So we're still seeing this underlying inflation, but I think that there's going to be an embedded inflation for a long term. Now, one of the little lines that I saw out of something Powell said today is that they're committed to getting inflation under control yet. They're still saying those words. But there is something that is going on inside of the price structure of just about everything, but especially these upward wage prices that have been built in, really going back to the pandemic and coming through this whole scenario, aren't going to go away anywhere. I mean, you can't give somebody, I mentioned this, I believe, last night, but you can't give somebody a raise and they go, okay, that was just temporary. We're going to bring that back into where it was before. Now, what they'll do is they'll start to lay off people, and probably over the next couple quarters, we'll start to see layoffs, continuing contraction, trying to adjust the numbers that are out there as far as the earnings and just what's coming in. So you think things are messed up now, I think they're going to get worse, just trying to offset a lot of these internal pressures, wages, and other things that are going to be embedded in. I mean, energy's probably not going to go down very much. If it did, even if it went to $85 a barrel, it would still have an embedded cost as we go forward. So let's go ahead and take a look at the database tonight, show you what's going on there, and then we'll get into the technicals. So here we are, we're at 39.66. We were at 41 and change, just under that 42% number that I talk about all the time. We had 213 buys, 665 sells. So basically a 6-to-2 sell versus buy ratio. So I was in the live room today. I was talking about the potential for maybe we'd see a positive rotation tonight. Well, that didn't happen. Not really material. We're still at 39.6. I would like to see this get some more traction, but we're coming into this long holiday, and we'll see if what kind of session we're going to have. This is, like I said, the final session of this quarter, final session of the month. So everything is kind of coming to a head here. Whether there's any kind of window dressing, I don't think there will be anything significant. But we saw last Friday, we saw that huge volume number based on the rebalancing of the Russel. So I don't see anything else out there that's going to do much along those lines. But this is really this is just part of the process of maybe setting up a bottom. I'm going to show you a pattern here in just a minute I'm going to discuss it. I won't be able to, I'll map it out on the screen the best I can. But this is going to be what I think is going to happen, at least initially, as we start this next quarter. So let's go ahead and get into the technicals. Okay, taking a look at the S&P, we traded down to the 10-period moving average, just above it yesterday. We're seeing a continuation of things. Let me see if I can get this up a little larger. Bear with me 1 second. I'll get these numbers on the screen for you. So we look at the range yesterday. We got down to 3801. 3800 was S1. I talked about last night. I thought we'd see S1, R1, possibility of R2. I thought we might see a rebound. We did not get that. We traded up to 40 was all. We came short of R1. There was a couple patterns intraday that looked like we could actually see a squeeze and maybe print in the 40, make a new high on the session, maybe print towards a 51. We never got it. It just waffled into the close. And then overnight so far, we've seen it trade back down to 05, which was a good trade location a couple times yesterday. We saw bounces from 38.05 all the way up into that 30 handle, and they'd pull back and forth. It was just, like I said on the opening comments, it was erratic trade, and it was just total volatility. It was just all noise. In fact, I'll show you something here real quick. This will tell the whole story better than anything. This is yesterday's range, just whipsawing back and forth. And tonight we're still within that same range that we traded. This is a 5-minute chart with the Wavetech webs on it. And we just nothing here. We're starting to see a little bit of a bid back in, probably coming back into this range. But if you looked at the mid-range of this, it's probably about where I have the cursor right now. That is where we've just been oscillating on either side of this pattern. So this is, I'm going to talk about this pattern first, then we'll go into the long term. I'll bring up a chart. Unfortunately, I have a love-hate with TradingView. I had a chart saved, so I thought of the quarterly wave count, but we'll go through that larger pattern here in just a minute. But this is what I believe is going to happen. I'll lay out this pattern a little bit, and wish I could draw it on, but we have the low where I've got the cursor right here at 36.39. We rallied up to the 39.48 level. We got rejected from there, And this is what I think is setting up here is a right shoulder. And you'll see these Fibonacci projections above the pattern here. So you'll see that there's 3 projections to the upside. And I talked about this a little bit last night, but the projections for this move up here are for high target 1, 40.33, 41.84, 42.77. And I think this is probably going to be over the next, we're just going to call it 8 to 12 days. So we've got a long weekend coming in here, and this is setting up for this type of move. We're going to have to get a close above the 21 period moving average. Right now that number is at 39.02. But let me give you a little bit of math that we did in the live room today, and I'll post this image on the Twitter account, as I told you, here in just a minute. So the numbers set up this way, just on the theory that A and C are equal, or based on the Elliott wave theory, what we're looking at here is that the swing objective here would be for a move of 306 points plotted from the low. We're going to assume that probably today is going to be the low, and maybe today by meaning Thursday, if we get a low today, or if we had the low on Wednesday, then the setup would suggest that we would rally up to 1 and 3 equal, or an A and C would be equal at 41.07. That would be 306 points off of that target. Now, one of the things that I'm looking at here is that we may not get a full retracement. We only may get a 0.618. And I'll show you something here, and I'll try to set this up the best I can. I went through this in detail today in the live room, but the weekly chart is going to be what's ultimately going to determine the at least initial top of the market. And it just depends on if it took a couple weeks to get to these levels, then there could be a change in the momentum. There could be change in the configuration and the charts, but we're going to go with what we know right now. So that low that we're talking about here at 38.01, the length of, if it was only 0.618, a 60% retracement, or the length of 1 and 3, the 3 was only equal to 0.618 of that. That would suggest 189 on that level, and that would suggest we'd go to roughly between 39.55 and 39.90. So that would be a retest of that high, possibly just going up to 90. Like I said, the full retracement of 300, or the full length of that rally, 306, would put us at 41.07, and that would give us a target range then of 40.33 to 41.07. I'm not going to go into any more detail from this pattern, just because if I could draw it out, put the numbers on the screen, it makes sense. If I get this thing here working, it's electronic tablet, if I can get it to display like it's supposed to, just haven't had the time. I've just got way too much going on. So hopefully the long weekend will give me opportunity to do that. But I put this up on the screen. So what I'm basically talking about, that we should bottom. If we didn't bottom today, we should bottom tomorrow, and then see this move start. And if we go down below, the drop dead number is 37.60. I believe we'll call it 37.70. If we traded below that, that would indicate there's a failure of this pattern. That would be too deep of a correction. As it stands right now, get these numbers right, 37, I just had to look up the number, 37.95 is a 50% retracement of the rally that I just discussed, that 306-point move. So what that is setting up here is that we're retraced 50%. If we go much below 0.618 or 0.66, which is really a GAN number, If we went much below that, that would be a failure of this pattern. So we could trade into the 37.70 level, and if we hold that, then we'd still set up the next move. But now that 306 is still the same, so we would have a different range. And this is why I'm giving you a target range on this rally of 40.33 to 41.07. This would be the target range. That's the, not the minimum, but that's the most likely target range. And we could see an extension in here, but we won't know until we start to see some of the dynamics of what's going on in this pattern. So let's go over and take a look at, let me get to the right page here. This is the quarterly chart. Let me go full screen. So this is that huge quarterly chart. So each one of these bars is 3 months. Like I said, we're 38.49 is the quarterly 10-period moving average. And that, if you look at the PPMs here, they've all collapsed. And you can go back and look at previous times when this has happened. You have to go back to the dot-com bust. You could go back to the highs right over here in 2008. Then you could, and we really haven't seen any of those kind of dramatic. I won't take you through the tour. There's some numbers in 1973, 74. So what I've been talking about for a while here is that we're likely to get, after we close this quarter, I think we get one positive quarter, meaning we just close higher than wherever we close tomorrow. That doesn't have to be any necessarily the numbers I just talked about. The extreme numbers just off this pattern I was talking about a minute ago is 42.23, 42.96. So we could get back toward a 43 handle, but that's probably about it. I don't think we even get close to a 45, but we'll see what unfolds here in the next 3 months. We've got a lot of time to look at this chart, but what we're seeing here is most likely the beginning of a 4 to 6 quarter decline. Now, I'm just going to go on this for a few more minutes, because if you're new to the channel, you may not have heard this. I told you folks back in January that this was going to be a thing. We got the outside reversal in January and February. We confirmed the reversal. We got the next quarter for Q1 to close lower. And then what we've got from the standpoint of what we're seeing now we got the quarterly confirmation. So we had an outside bar, like 48.18. This is on the cash, 48.18. And forget the lows here. But the point is that we had the outside reversal. This is the confirmation of the outside reversal on a quarterly basis. So now this tells us that we should get at least 3 to 5 more bars lower. And there's a couple criteria that we're going to have to meet as we come into this quarter. So we should see quite a bit of volatility, I think, as we go forward. Now, typically, we're in dog days of summer and the markets get really quiet. Well, that's probably not going to happen, especially with the July meeting with the Fed, all the uncertainty around the balance sheet and interest rates and everything that's out there. I'm not going to cover the yen tonight. It came back in as I thought. It's back at 134. But there's so many elements out there right now that are cross currents in this. So I'm just looking for a huge amount of volatility. I think initially we're going to get some positives to confirm this pattern that I'm talking about here. Is we'll have to make a lower low sometime in the third quarter than what we made in Q2, which is that 36.60 number. And we make a lower low, then we'll confirm another possibility of 3, maybe 4 bars. And what we're talking about here is a year. We're not talking about this isn't a daily bar. This is a quarterly bar. So this is very significant. I think it puts us into, like I said, a scenario of maybe an '08 high, but even then, '08 didn't get, I think, did get about 6 quarters down. So we're likely to see that. Now, the depth of this scenario, it's really interesting, and I'm not going to talk about that tonight, but that's something I'll be talking about as we go forward, as we get more information about this pattern. And, it's interesting that I set this up in January, and we're just there walking this forward on different events that needed to be confirmed, and they've all been confirmed. Nothing hasn't been confirmed all along the line. We got the outside bar, like I said, in a monthly. We got the first, now what we're doing right now is confirming that first quarter reversal pattern, and now it's game on. And this is not going to be over anytime soon. And just to kind of go on just for a minute here, it is the end of the quarter, folks, so I'm entitled to a little bit of a rant here. But as we come into where we're at right now, there is starting to be evidence that there's something way, way bigger than most people are talking about. The recession fears that folks are talking about, oh, it's going to be mild, and it'll be over really quick by the fall, everything will be wonderful. No, it's not. That's not happening. Okay, this storm is not going to be over anytime soon, and it's probably going to be at least a year plus before we actually see this play out. And I don't know what the dynamics are yet, what's going to be driving this thing. We do have a crazy war going on there could be consequences we don't know about. There's all kinds of potential out there, and there always is. But in this case right now, there's something much, much larger than what we've seen in any other period. This is way bigger, in my opinion, than what we had in 2008, and that was that absolutely was a complete, that it was terrible, that the whole scenario, and it was dramatic. I think this is much worse. I mentioned this before, just a little Twitter with my buddy Hugh Hendry and Raul Paul were talking, and they're talking. Paul was talking about it being like 2018. I'm like, and he was going, no, it's more like 2008, and I'm like, no, it's much bigger than both of those because of the dynamics here of this debt. We have a Fed that Powell is making his mission now to fight inflation. And I didn't talk about this last night, but the potential, there was Zimbabwe of all places, right? I talked about this in the Twitter post that I did the other day, but they've raised rates like 200 to crazy numbers, 200%. It's not affecting inflation. And this is my point. Raising interest rates is not going to necessarily affect inflation. The only thing they can do is to throw us in a massive, recession, which could get out of hand and just break everything. And I'm not saying I'm getting a little down this trail too far, but what I'm saying is it's not going to be over this fall. It's not going to be mild. It's going to be an elongated situation. It's going to take probably a number of years to unwind this crud that we're in right now. And there's no easy fix because the Fed, every time in the past, think about it, whether let's go back to at least '08, right? QE started, 18, everybody, they just keep adding more money. The pandemic happened, more money, add more money. Well, now they're trying to do the opposite. So I know you folks know this, but I'm caught in a loop here I'm trying to get out of. But it's basically what we're seeing here is something significant, and this is not the end. It is the beginning. It makes me think of a Ozzy Osbourne song. Is this the end of the beginning or the beginning of the end? And I'm going to go, it's the beginning of the end from the standpoint of where this market's been. There's going to be a lot here. So I'm obviously longer term, there is not a bullish outlook that you could come up with. Let's go ahead, finally get into the Nasdaq. I've already needed to go through that long-term rant there just to end this quarter because it sets up something I started in January. This is an ongoing story. I warned you folks that this was going to be the story, and here we are. So let's go ahead and take a look at the Nasdaq. Okay, so the Nasdaq is still under a little bit of pressure tonight. We're looking at it being down 17 handles right now, but it's in this flat range, and PPM1 is at 0.04, so it basically has lost most of its upward momentum. But PPM2 is right now minus 40, PPM3 minus 2, I'll get this out, minus 29. These are downtrend numbers, and we're not really going to be able to get much above this 40-period moving average. But this whole outlook will change in about 2 days of stability. So you'll start to see PPMs turn back up. A lot of things are going to happen, and all we have to do is go sideways to make that happen. So we don't have to trade higher, don't have to get higher closes. We could actually close slightly lower and get this pattern to set up. And it's the same pattern that I'm talking about going up into these Fibonacci targets here on the Nasdaq. And those are high target 112, 522, 1307, 077, and 13421. So this would be a right shoulder setting up here. There is a pivot in this pattern as well, which comes in at 11,191. So that's basically where your major support is on here. But I think that we'll see this set up, and we'll move into these Fibonacci numbers. And for today, probably looking at our S1 11,615. R1 11,767. Will it be quiet today on Thursday at the end of the month? We'll see. We'll have one day to trade on Friday before we get into the long weekend. But the bottom line is this pattern is setting up, and it's across the board on all of these indexes. Here we're at the Russell. Like I said just now, it's across the board. This is the pattern. So if you look back at some of these previous patterns, this is exactly how they all set up. We get this one right here. I wish I could draw on a screen, but this pattern, if you can see my cursor here, it rallied up, we got the right shoulder, and then we went up to the high. So we're looking at another one like this, and what we may end up with is just a sideways range and coming into some patterns. Now I forgot to show you this on the weekly S&P, but I'll show you here. It's the same pattern here, is that the 10-period moving average is the primary number out there, and that's around 39. I believe it's right around 39.90 on the S&P. Here we're looking at on the Russell 17.99. But all of this, if you just do a simple 10 weekly, you're going to have the value. That's where at least the initial resistance point is going to be on the rally. And depending on what happens to PPMs, what happens to this downward pressure, that will determine whether we're going to be able to get through that, or if that's a rejection point and sends us right to new lows. So there's going to be some interesting things that happen over the next 5 to 8 sessions that we're going to have to watch closely. So the next market we'll go is treasuries, and treasuries came back in. It was funny. I saw some news stories out there that today everybody's worried about the increases in yields. Meanwhile, bonds are going down and going up in price and going down. And so we saw really just kind of come back into some of the ranges I've been talking about. The low was 3.09. We're looking at, this is the weekly chart. So that rising 10 is coming up here, which is at the 3% level. I don't see us getting much below that. But if you look at the PPMs here, they're starting to lose a fair amount of momentum. So we could end up seeing a high level consolidation. Maybe I mentioned this number before, possibly getting down to around 2.84%. And maybe with that coming in, maybe that's some stimulus for the equity markets. I'm not sure, but it does look like they're about to come in here. Let me just change this over to a daily chart so we can see the short term. It's interesting. I got Fibonacci targets up at 378 coming in. But look at the PPMs here, minus 1.2. This is just collapsing here. The downward pressure, I talked about this the other I think 2 videos ago, as 3.24 is exactly where the major resistance is based on that 10-period moving average, with that PPM1 in a serious trend level down, and that's right where we got rejected from those levels. So we're right after printing there, all of a sudden we're back to 309. So we printed 3.25 roughly, and then we come right back in. So it looks to me that we're starting to get a rollover. The 40-period moving average is sitting here at 302. We do have that 10 at 3%. So looking for it probably to come back into the 3% level. I think as we come into the end of this week, we should hold those levels. I said tomorrow's a big day just because of the end of the quarter and all of that. Real quick, we'll take a look at the yield curve. Nothing there at all. We're just absolutely sideways. No movement whatsoever from that viewpoint. So nothing there at all to look at. Just stabilization. We're just not inverted. We inverted for just about a week or so, maybe 10 days, and then we're right back above the zero line again. All right, next we'll look at crude oil. Crude is up 0.25 on the session. PPM1's turning upward, traded right down. I talked a little bit about these numbers last night. This is daily, 109.63 is the where the support is off of this 40. I'll show you the weekly here in a minute, but we're stabilizing here, and we do have some Fibonacci targets up above. High target 121, 129, 134. This could be maybe a right shoulder setting up, and I'll bring up the XLE just for a second here, just to have some perspective on it. But we're just seeing this a fairly decent pattern, but we really haven't got the triggers to push us higher just yet. Let's take a look at the weekly. We still have that rising 10 in there. 109 is exactly where that is. We printed this week down to 105, but bounced right back over the 109. We should stay the course on this week and stay above 109 as we come into Friday. And this PPM 2 is also huge, which the 21-period moving average, 102. So I would put the extreme of any price decline right now about 102. Let me bring up the XLE real quick. This is what I was talking about, XLE. We've just got this huge collapse. It went below this is weekly. It went below the 10, 21 week, almost down to the 40. And we're sandwiched now between the 40 and the 21. So 68, 48, 77, 63. We're just going to see this stay. We rebounded. It felt like, oh, this thing's ready to run again. No, as I told you the other day, this is going to be a big consolidation, and there's going to be a lot of work to be done. This is probably the most crowded trade that we've seen for a while. We saw that, just about everybody. You could turn on any news channel, go to Yahoo, and everybody's like, energy, 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 energy. And we started liquidating on that break. Our short-term models were kicking out of a lot of those stocks, and then we got a big tranche last week ago, Monday. We got out of a lot. Well, I think we're still around 20% and 22% invested on those stocks. So we have 80% cash on those energy stocks. So it gave back a fair amount, but that was a really fast decline. That's because everybody realized that the only sector that hadn't been touched was the energy, and that was the favorite trade that you could see, and that was quickly taken away. So now we're looking at consolidation. Maybe there'll be a rally back, but I would be very cautious being in any of these stocks on maybe a short-term basis on an individual trading them, but I wouldn't be looking to get positioned just yet in this market. There may be some more downside depending on what happens here as we get into the Q3. And if we do get an equity rally, then they'll probably stay stable. If we got any liquidation, there's still a lot of money hanging in these stocks, and you could see this would be a place where folks would start to harvest to get some cash. That may be what happens here. So next we'll go to gold. Just continues to be very, very quiet. We traded down to 1810. The 1817 was last week's low. This is a weekly chart. So we're just not getting any traction. We're still drifting. We had that cycle low last week. We're going to need in the next couple of days for the market to rebound and get back. Like I said, the minimum number is 1850 here, and there's still a potential vulnerability to the downside. The only positive that we're seeing here is that the PPMs are starting to stabilize. PPM 1 is turned up. It's still very negative. It's still in trend mode down, but it's starting to turn around a bit. If we get a penetration of the first derivative, that will be at least an encouraging sign that we're likely to move back toward the 1854 level and maybe challenge that again. So the final market I covered tonight is Bitcoin, and Bitcoin just continues to be under pressure here, where the low was 19,845, last trade 2065. The 200-week moving average continues to be a ceiling on this market at 22.5. I'm just rounding this off. That's continuing to be an issue. And when you look at the PPMs here, there's just so much downward pressure. There's nowhere to hide on this market. And especially with a lot of folks stuck in some of these exchanges they can't get out of, they can't get their money back. This is pretty disastrous. And I just want to bring that up just based on what's going on with some of these exchanges, some of these places where they're paying big yields and all that people have gotten in a lot of trouble. And I think this is going to affect sentiment for a while on any rebounds. It's going to be difficult. We've seen a couple other hits before, right, in this market, obviously. But we've never seen the backdrop that you have exchanges not allowing withdrawals, all those kind of things happen. When you have that, that's when your money gets locked in, you're not very anxious to go back in and get your money locked up again. And so I think this is going to be a long-term effect on sentiment, and there's going to be, I'm trying to come up with the right word, there's going to be some a lot of soul searching, we'll just say, to go back in this market, and who you're hanging out with is going to become really, really important. And, probably the only good thing, not promoting, but maybe Coinbase, at least they're publicly traded. A lot of these independent or private exchanges could be very, very difficult for them to convince you and me to put our money into those exchanges. So be cautious of that, or aware of that. And I think that's going to affect any rebounds. And if nothing else, there probably another round of potential liquidations. I'm going to bring up the daily, and I've been talking about this every night. Let me just go full screen here. As the downside objectives are still valid, we're looking at 15,000. We'll just round off 750, 12,900 are still valid places that this market may seek on the downside. So, there's just a lot here. I mean, there's absolutely no reason, just based on that market sentiment, people are going to be, I think, really, really careful about what they're doing. And I feel sorry for those that got stuck in some of those exchanges, because that can't feel good, especially if you've got a substantial amount of capital relative to whatever your stake is. That's something that you need to be really upset about if you're stuck in those things. My only close experience to that was on Chicago Board of Trade in 1979, and I got stuck in a soybean trade for 4 days, locked limit down. I wanted to sell the second day that it went, and there was no way to get out, so I was stuck in the trade for 4 days. And what they were doing is the market was going down a limit, down every day, so it was just taking a huge chunk of my money. So by the time I did get out, there wasn't much left. At least I didn't go deficit. But it was that's probably the closest experience I had to that. And I can tell you that was one of the best lessons I ever learned, ever. Okay, I was 27 years old, and that was like absolute best lesson. And that that made me become a student of the markets from that point. That was 1979, and I've been involved in these markets and a lot of levels, and it was a great lesson. So I think those people that may be stuck, you're learning something. It's not very much fun to drop a bunch of capital, but you're young. I was 27 when that happened. I'm here now. I always say, when those things happen, typically no one's gonna die, right? You just have to rethink your strategies. You start to understand risk. I think this is one of the best things that happen. I know probably predominantly this is probably millennials that are involved in this. And that it's a tough lesson, but at least you're young and you get an opportunity to figure out how to handle this going forward. I know that became an obsession with me after that event, and it set up everything from to the point of what I'm doing today, and building non-emotional strategies, all of those kind of things. So anyway, folks, we still have another video tomorrow night, but this is the end of the quarter. I think that it's going to be an interesting day. Hopefully it's not another day like it was yesterday, and we'll see how it all sets up. We'll see you tomorrow night. Those of you in the live room, I'll see you at 1 o'clock. And also, if you, up at the top of the screen here is a link to the indicators, and you can get my indicators. You also get 30 days in the live room for free, and it's a fun place to be. We do education, set up trades, do all kinds of stuff. So hopefully we'll see you in that room, and we'll be able to help you make some money in the future. So anyway, hope to see you there. See you folks tomorrow. Have a great evening. Have a good day trading. Yes, I use TradeStation. Yeah, hit that like button, folks.